both decided to come today to talk about speeding up sales cash. And so can we give them a warm welcome?
Well, welcome everyone. I'm Lee Elsmeyer. I'm the market president for First Merchants up at our Chester Boulevard office across from the hospital. And today we're going to talk about a boring bank term, cash flow. And really what it is it's a circle of the money that flows through your business. So it can be very basic. I use the example of a barber shop. That's the simplest cash flow it is. You walk in, get your hair cut, give them the money to pay for it. So the cash flow is just like that. It turns. But if that barber then decides, I'm going to start selling hair care products or accepting credit cards, stuff like that changes your cash flow. But if he's going to put in inventory, he's got to purchase the inventory, so that cash flow goes out to that, and it can take longer than for him or her to see their money come back. Or if they discover, I've created the latest and greatest hair care product, then suddenly they're buying materials to make that product. They might be importing something for that. So then they've got materials, work in progress, they've got inventory. So their cash flow suddenly gets stretched out. So there's a lot of different tools in order to manage your cash flow, work to try to speed it up. And Heather is our treasury management officer that covers this area and a couple other areas within our bank. And what she does is works with small businesses to kind of help fine tune how they can speed up that cash flow or change it. You can tighten the outflows, you can change how the inflows come in. So I think it's that backroom stuff that a lot of business owners get excited about, maybe what they do, what they create, and on the back burner is how I bill or how I collect funds. It's not as exciting for them. So, Heather's area really dives into that and helps put together different systems. So I'll let Heather start off and talk about it and share it with you.
So I'm Heather Gigliotti. I'm a Treasury Management Officer for First Merchants Bank. As Lee mentioned, I really am all about cash flow. So payables, receivables, dollars on deposit, and then a big part of what I do is help businesses mitigate their fraud risk. I've got Merriam-Webster's definition of cash flow up here, which really is just a measure of your organization's liquidity, which generally consists of your net income after taxes plus non-cash charges against your income. When we talk about cash flow, one of the most important things that you can know about your cash flow is your EBITDA. And I'll just read what EBITDA is. It can sometimes be a synonym for cash flow. It's your business's earnings before interest, taxes, depreciation, and amortization. So one of the most important things that I can counsel businesses to know about their cash flow is know your numbers. Monitor, monitor, monitor. So proper cash flow management means keeping track of all your assets and expenditures. It never ceases to amaze me when I go to see a business, and really one of the first things we want to talk about is cash flow, and I'll ask a question, maybe perhaps at a restaurant, help me understand what your food cost is. And the restaurant owner looks at me like I have two heads because they don't know what their food cost is. It happens every day. Recently I went to see a manufacturer. I said to the manufacturer, 120 employees, perfect, help me understand your payroll costs. And the manufacturer didn't really have a good idea of what his payroll costs. So when we're talking about cash flow, how to expedite cash flow, what we're really talking about is when I sell a product to a customer and they pay me, how quickly can I turn that around and buy things for my business? These are a list of some of the things that are critical to know about your business. Certainly revenue, most business owners know to keep track of their revenue. Secondary income streams, bills and debts, not forgetting about taxes, and certainly there are great programs out there that you can utilize to help with your taxes, your operating expenses. But the last one is really where some business owners get hung up, and I would encourage you to talk with your accountant or your legal team about those one-time purchases. because large purchases can make it look like in a year that perhaps you didn't have the revenue that you had or the income that you had, or perhaps worse, even a negative cash flow for that year. So I would encourage you to talk with your accountants or legal teams when you're making one-time big purchases for your business. Several tools have been developed to help business owners manage their cash flow without hiring full-time accountants. New business owners or businesses that will remain relatively small can use most computers today. Most of our clients work with the Microsoft Office suite, and there are some great tools in there. You can search Office online to get tools for cash flow that other business owners have already created and have put out there to use for free, such as templates for Excel. Now, certainly you're going to want to tailor that a little bit to get the reports that you're looking to get for your business. But even Google Docs, there are several different websites you can go to gain the documents that other people have created so that you don't have to recreate the wheel. The challenge with smaller businesses or new business owners is you got into your business to do your thing. You got into your business to sell retail. You got into your business to make cookies. You got into your business to sell insurance, but not necessarily the business part of running the business. I've been helping businesses for over 15 years, and every single year, businesses that I've started to help, they didn't have a good business plan. They got in their business to be, the baker or the restaurant owner, but failed to manage the business side of the business. And sometimes that can be detrimental, or the business can go out of business because they don't know the numbers. A variety of business types and sizes can use larger software programs, of course, like Intuit's QuickBooks, Peachtree. If you're thinking of, if your business is growing and you're looking to move toward a new software system, I would encourage you to reach out to your banking center, because there are a lot of software programs that can sync with your online banking at your bank or financial institution, and that can help save a lot of time as far as your receivables, your payables, your credits, and your debits, if those sync automatically. So accounts receivable aging. By show of hands, does anyone invoice their customers? Okay, good. A lot of people invoice their customers. So accounts receivable aging is a critical part of your accounting. So I met with a business customer not too long ago where his question was for a line of credit, and he needed a line of credit for working capital. And in a business, working capital generally is, I put out the money for my product and I won't get paid for my product for quite some time. And it was ponderous to me because his business was creating custom logos on printed materials that were specific to the company. And I was helping look for ways to find collateral for the line of credit he was requesting. So we look at the accounts receivable aging report. This was not his, but an accounts receivable aging report can show us the customers, if they've paid under 30 days, if they're current, 31 to 60 days, if they have not paid in 61 to 90 days, or if the money they owe is over 90 days due. And when a bank takes a look at accounts receivable aging, most financial institutions will regard anything over 90 days as uncollectible. There are some industries where that may not be the case, like if you order an airplane or something like that, where it has a really long sales cycle. But anything over 90 days is uncollectible. So for the purposes of the print company, I said, help me understand why you need a line of credit to fund something where you're taking an order specific for that customer and not getting paid for 90 days. Why aren't you getting paid for 90 days? He said, oh, well, that's just always how we've done it. I said, so let me understand. I can call your company, I want Heather printed on 1,000 items, and you're not taking a half down payment or a full down payment for those items? He said, no, I would just take your order and you'd pay for it when I pick it up. I said, what if I never pick it up? He says, oh, well, we've got some problems, 150 days. I said, okay, well, I understand that this is always how you've done it. And his big fear was, they're gonna go to someplace else. They're gonna go someplace else. Well, right now you're asking for a line of credit that we're probably going to use your house to secure. My suggestion is that perhaps we take a look at these processes to help, so maybe you don't need a line of credit, because the sales cycle on that type of business should be short. So one of the numbers I would encourage you to know about your business is an accounts receivable aging report. So if you're in a retail business, these all less than 90 days, all less than 30 days, you're not invoicing your customers. So take a look, and if you Google your industry, you can get an idea of what other business owners in your industry are using and what the normal is for these types of accounts payable. So if you are in, let's say, a manufacturing business and you manufacture a certain thing, you can go on Google and look, what is the normal sales cycle? What's the normal cash flow cycle for this type of item? And if other business owners say, well, from the time we sell it to the time we collect is usually 60 days and you're running at 90 days, then perhaps you can look at ways to make that more efficient. But the most important thing to know is where are you at so that you can compare with other industries like yours to see where you're at so that you can make improvements. Okay, accelerating cash flow, the receivables end. So by show of hands, we looked at people who are paper invoicing their customers, email invoicing their customers. Some of us in the room have over-the-counter retail purchases, and some of us in the room have reoccurring payments from monthly buyers. So as it pertains to speeding up your cash flow, when I take my income, when I take my revenue to when I can spend it on products for my business, as far as paper invoices go, we really as a bank are helping try to get people away from paper, whether it's invoicing, whether it's checks. Checks continue to be one of the most frauded things in the bank, but paper is so slow. So if you are paper invoicing your clients, you're creating a piece of paper, you're putting it in an envelope, you're putting a stamp on that envelope, that's already 50 cents. It has to go through the mail. And honestly, is what we're seeing as far as receivables, if you are sending a paper invoice and that's the only way you're reaching out to your customers, that will probably sit on desks for 2 weeks before somebody writes a check. It is possible some of our customers are putting, a coupon at the bottom, pay with your credit card, and requesting that 16-digit card number. So if you are still doing that and taking a credit card number by mail or by handwritten or by phone, I would encourage you to try to get away from that practice. In 2015, in October of 2015, the liability for fraud as far as credit card machines and credit card fraud shifted from Visa MasterCard to the merchants that are taking the payments. And what I mean by that is if you're taking credit card payments over the phone, or if you have a drawer where you keep 16-digit card numbers where you're putting them in the machine every month to charge somebody, and a breach occurs and it's found that the breach occurred at your location, you then become liable for all of the fraud that happened as a part of that breach. And that's a big, big deal. So I would encourage you to get away from the paper, writing down the credit card numbers, taking those credit card numbers on the phone. And if you're going to continue to paper invoice people or email invoice people, I would encourage you to work with your financial provider, work with your accounting software provider to be able to send emails for invoices for several reasons. One, very safe, private, and secure. Two, you can put a portal on your email so that people can click on the portal and they can pay with their securely with their credit cards or debit cards. They can pay securely with their checking accounts, and they can do that immediately. So the easier you make it for people to pay you, the faster you're going to get paid and the faster you're going to have that cash to use for other purposes. If you decide to go with an emailable invoice, whatever program you use, whether it's your accounting software or work with your bank to make that happen, it still does allow you to print those invoices and mail them. Certainly we're not going to get away from the folks that still want a paper invoice, they still want to send a check, and we want to make it easy for those folks to pay too. But as a rule, we want to help people see the value in electronic invoicing and electronic payments for their safety, privacy, security, and how quickly you get the cash. Over-the-counter retail purchases, cash of course is king, and of course the quicker you get that cash to the bank, the faster you can utilize that. But I wanted to talk a little bit about debit card and credit cards as it pertains to more of a retail environment. Make sure that the provider that you're using for your credit card or debit card processing is giving you next day funding. If for some reason you're not getting next day funding on your credit card machines and processing, I would encourage you to call your provider, call your financial institution, see if perhaps it's something that you're doing on your end. Sometimes it could be a matter of you're not batching by 10 o'clock, you're batching at 11 o'clock when you go home at night. And that means you're getting second day funding instead of next day funding. Sometimes it can be that easy. Sometimes it's a matter of your processor's not set up to do it that way, and maybe it might make sense to take a look at another processor. Over-the-counter retail purchases such as check. I do have a solution for checks. The challenge can be with checks is your business goes all day, it goes past 5 o'clock. You may not have a chance to get someone to the bank or to make those deposits by 5 o'clock. So one of the solutions that most banks or financial institutions can help with is a remote deposit scanner right at your desk. So a lot of financial institutions have these, a lot of credit unions have these. What it can do for you is several things. It can put that deposit scanner right by your desk. You can have usernames for people in your office who are allowed to make those deposits and not see any of the banking. They're only allowed to make deposits. But if you're a retail establishment and you need to get those checks to the bank, but you don't have a runner today, you can put your checks in the machine, and a lot of banking institutions will even give you extended time frames to make these deposits and still get the same credit as though you had walked into the branch and handed it to the teller. So for example, oh yes?
What are those, does that depend on the bank that you use to get those, or does that, if that makes sense, like do certain banks not use those?
It does depend on the bank that you use. The actual physical units, there could be several of them. In a lot of banking centers and a lot of financial institutions, you can buy your own. I think actually Costco sells these. But the important thing is your bank has to have the software to make it work. So I would encourage you to talk with your banking institution, with your financial provider or your credit union to see if their software is compatible with this. So at First Merchants, our customers that have these, most of our banking centers close at 5 o'clock, but for our customers that have these devices, they can make those deposits until 6:30 each day and still get the same credit as though they had walked in the bank and handed that to a teller. So it is a great tool to help accelerate cash flow, because if you miss the 5 o'clock cutoff time by the bank, you can't get next day availability of those checks. Additionally, I would ask your financial institution if for the one-off situations, you can mobile deposit a business check. A lot of financial institutions will allow you to mobile deposit a business check, and some of those cutoff times can be 9 or 10 o'clock at night. So in the construction industry specifically, I've encountered this a lot, where a customer will hand a person a check, but they're in the middle of nowhere because they're building a new house. They can't get to the bank by 5 o'clock, but they need that money for cash flow to get their supplies tomorrow so their team can continue to build the house. So I would encourage you to talk to your financial provider to see. Sometimes there are limits set up when you open your business accounts, because business accounts are unfortunately one of the more frauded things in a bank. So a business customer is a new customer to the bank for at least 30 to 60 days until each financial institution can say, yes, I understand that they're a business owner and that they are legitimate. So sometimes the limits on those sorts of things can be lower, but if you talk to your financial institution, help them learn a little bit more about your business. Knowing our customers is a huge part of what we do for the bank, especially when it comes to businesses, because consumer relationships with your bank are very transactional. You could change banks and it's not a huge deal. You learn a new set of people. You learn, who likes tapioca pudding and cookies at Christmas. But businesses have more than a transactional relationship with their bank. It's more of a partnership. So the more you can communicate with your banking team, the more you can communicate with your relationship manager, the more they know about your business, the more likely it is that sometimes you can get the limits increased, especially on things like those mobile deposits. Or that you can get more information from your team about how to make your business run more efficiently. I just wanted to go back here. So reoccurring payments from monthly buyers. So if you are selling the same group of people items each month, or if you have the type of business which is maybe a service-related business, like a gym membership or maybe a storage unit where you owe the same thing each month. I wanted to make sure everybody knows that the cost of banking services has really gone down over the last few years. And some of the services that have really been only available to $10 million or more revenue businesses are available now for the general public. So I wanted to make sure that everybody knows that most financial institutions can allow you to set ACH. So an ACH is the electronic payment system whereby you might already be using something like this to pay your payroll by direct deposit. If you're not using the system to pay your employees by direct deposit, perhaps your payroll company is, but it's that same system that pushes direct deposits, which allows businesses to pull funds from folks as well. So ACHs can be pushed, they can also be pulled. So if we're talking about cash flow on reoccurring payments from people who buy from you every month, ACH is a great option. You can talk to your customers. Hey, I want to make your payment easy. Would it make sense for us to just pull our payment from you every month? We can pull it on whatever day you choose. You have them sign a form that gives them permission. They give you their routing number, account number, and then that's instant cash flow. As soon as you pull that payment, it is in your account and ready to use. So I wanted to make sure that everybody knows that those are solutions that are now available to small businesses.
And Heather, just a couple comments on that. You know, as you go from the slowest to the fastest, probably in most businesses, probably 99% of your customers want to pay you on time. You know, that's their goal. So, you know, if you're sending it by mail, like Heather said, you know, takes 3 days to get there, and they may set it aside, takes 3 more days to get back there. But when really, all they really want to do is pay you on the due date, on time or sooner, and using some of these other methods just speeds that up, makes it easier for those customers. Yes, you'll get a few that might say, oh, I don't want to give you my bank information, or, you know, I want a paper statement. But there's a lot that are getting more and more comfortable with the ACH, using a credit card. Those things are a lot easier, speeds up your cash flow. It's really doing what your customer's probably wanting you to do anyway. So that really speeds it up. And then kind of going back to the remote capture, you know, what I find amazing on both that and when you take your picture of your checks is how well those readers read. You know, you get a check and they say, oh, I can't even read what it says, or you put it through there. That scanner does a great job. You don't have much, you know, it'll go through the system. It might pop up and have you double check the amount and type it in. But doing both of those ways of making deposits, you know, is fast, it's easy, and like on the mobile with the picture, I mean, a lot of times on mine, I'll get back within minutes that it's been approved and deposited. And again, do you know off the top of your head what time?
I think our cutoff's 9 o'clock.
Yeah, so by 9 o'clock, if I get home and have a check that I want to deposit, if I do it before 9, it was just like I was at the bank at 9 o'clock in the morning. So it's a great way to speed up.
And that reminds me too, recurring payments, can be set up through your credit card machine and processor as well. So even though you have a machine that might set at your retail location, they generally have an online portal where you can set up recurring payments, or where a customer can say, just hold my card number on file. Then you don't have the 16 digits, it's in the device system and encrypted. So that you can charge them as the customer wishes. And those can be set up through your credit card processor as well.
I was wondering if there's anything like financial rules or something as far as with offering cash back, because I had a customer that only had like a few checks and was wanting to buy other stuff at the market, and I was like, well, I could offer this person cash back, my system handles it and stuff, being able to add more money. And that is the difference between this person being a customer and not, and it also would help benefit other people at the market. But
I will share with you that could be twofold. It is up to the business owner whether or not they want to do that. As a fraud mitigation expert, I would encourage you to only take checks, first of all, only take checks from people that you know are legitimate, get their driver's license, so on and so forth. Your customers that come to you all the time and want to write a check for over $20 more or $40 more, that could be a great tool for you because most business accounts have a threshold of cash that you're allowed to put into the accounts because banks pay the Fed for our cash. We also have to pay to have that strapped. We have to pay to send it back to them as well. So businesses that are really cash heavy might exceed the cash thresholds of their banking account and therefore have to pay a couple cents per thousand to have us process that. If you can instead give the cash away at your location to not exceed those thresholds, that's a great idea. The flip side of that is somebody's writing you a fraudulent check and now you've given them the merchandise and $100, your business would be out of that.
Okay.
So is it checks that they specifically were doing, or was it a credit card?
No, it would have been a check.
Yeah.
But, I mean, checks sometimes can just sort of be like, are you feeling lucky today? Like
A PIN-based debit, I would say, would be the safest way to do that.
Okay.
So if they're putting their card in with the chip, they're putting in their 4-digit PIN,
Yeah.
that's really safe, very safe. And PCI compliance is the kind of the insurance that guides your credit card processing. And if you've properly handled the transaction per their agreement and guidelines, you can be covered for transactions that are PIN-based with 4 digits that go bad, you can be covered for that.
Okay.
Can you talk about the cost difference between credit card processing and the ACH debit option? Is there a fee that goes along with the ACH debit?
Each financial institution has their own fees that are associated with ACH. Generally, it's opening up a software module inside your online banking, and then there's a cost per usage. I'd say that cost can be anywhere from 20 cents to 50 cents each time you utilize it, whether you're pushing payments to people or pulling payments, and of course, work with your financial institution on that.
So it's more per use than a percentage of the dollar amount?
Correct.
Okay.
Correct. Yeah, I've never heard of a financial institution charging a percentage of the dollar amount for ACH pushes or pulls.
So most likely you may have to go to the next level of, say, online banking, which might have a fee that allows you to do wires and ACH, that type of thing. So usually that's what I've seen.
Right.
And then it's a per use as opposed to the credit card that's a percentage.
Right. Good, great question, thank you. Okay, for our folks that send invoices, paper invoices or email invoices that have a lot of your customers sending you checks by mail, I wanted to let you know that most banks have a service called Lockbox available to you, and you can talk to them about that. Basically, it takes the processing of your invoices that are coming in by mail and transfers that to the banking institution. For example, you normally get 100 checks a week in your business's mailbox. Well, having a lockbox means that you would change your payment address to a PO box that the bank picks those up at. So you wouldn't have to worry about any of your checks being stolen from your mailbox. You wouldn't have to worry about how much longer it takes to get to your location than the PO box. You can really accelerate your receivables by sending them to a PO box, having the bank pick those up, having the bank personnel open your envelopes, scan your invoices front and back, scan your checks front and back, deposit those checks, and we can even key item the account numbers on your invoices so that your accounting software can match those up when we send you the file. So all businesses are trying to do more with less, more with less, more with less. So if you find that a significant part of your man hours or FTE each week is paying somebody to open those envelopes, credit those payments, make those copies for your records, then Lockbox might be a great solution for you. Or if you have any challenges with your mail.
Heather, what level of volume do you think it makes sense to Lockbox?
You know, I really think that that is a business owner's decision. I mean, if it's a difference of hiring somebody to do this or paying the bank a couple of dollars
Right.
each month to do it, I think it's a business owner's decision. But I'd say that most of the lock boxes that we have probably have 500 or more payments coming in per month. We have some lockboxes that have 30,000 payments coming in per month. But it's scalable for sure.
And mostly, like in a small business, you'll see that, you got someone that's opening those envelopes all for an hour or more and logging all that, and most likely there's something else they could be doing. It's not like, oh, we get rid of a person. There's always something else they could be doing, but
Well, there was a very highly publicized fraud last year with Indianapolis Light and Power, whereby that person who was supposed to be crediting the accounts for the payments coming in, she was crediting the accounts for the payments that were coming in, but she was also taking pictures of the checks front and back and selling them to a fraud organization out in California. So when we think about the reputational risk alone to IPL, not even considering the actual damages of having everyone's account numbers compromised. And I think that that brings up a good point. Let's see what's next on the list here. I think now's a good time to talk about that. So when we talk about fraud, taking pictures of checks front and back, I always want to help encourage business owners to get away from using checks as much as you can into more electronic means. When you hand somebody a check, you have no control over what happens to that check when it leaves your four walls. If you hand somebody a check, you're handing them your account number, your routing number, and a known valid signature for a known signer on your account. And when I talk to business owners who say, okay, well, somebody gets a hold of my check, what is the big deal? Well, a lot of things can be a big deal. Because you have no control over what happens to that check, let's say I hand Lee a check for something I bought from him, and he deposits it with his phone, and it's done, it's in his account. Well, he leaves it on his car dashboard, and then he goes home, and it flies out of his car dashboard out onto the street. Well, what can somebody do with that information? Well, the fraud that we're seeing now is somebody picks up that check, they call their Discover card or they call their Capital One card, they use that routing number and that account number to pay off their $15,000 obligation. If there's one thing I can communicate very clearly to everyone in the room, a great takeaway, businesses do not have the same fraud protections as consumer accounts. For example, if you had a check fraud on your consumer account, you would expect to tell the bank, you would expect to get temporary credit while the bank worked that out. Businesses don't have that, and that's not just First Merchants, that is a business checking account rule at most financial institutions. If your business account is frauded by ACH, somebody pulls money out of your account, you only have 24 hours to let your financial institution know that that debit is unauthorized. That is not a bank rule, that is a NACHA rule that governs ACH. So if you are not personally looking at your accounts every day, if you don't have somebody personally looking at your accounts every day, it is critical that you talk to your bank about getting some protections on your account. You can set up in your online banking, you can set up alerts to let you know when debits are being taken out, but it is critical that you have a plan for that. Because if you do not let the bank know within that 24-hour window, they're still going to do everything they can to help get your money back, but there's no guarantees, and that investigation could take up to 180 days. About 2 years ago, I worked with a cleaning company who came in on a Monday and said, oh my gosh, there's 5 figures missing out of my checking account, what is going on? And what we found was, unfortunately we live in a world where any child can take a check that looks like yours, run it through their home computer, and print checks that look like yours. Almost most children these days can take your known valid signature off of your check and stamp it on 10 more that look like your check. So that's what happened. A fraud ring duplicated his checks. They made sequential what looked like they might be normally coming through in the next 2 weeks. They cashed them at multiple check cashing places and financial institutions over a weekend. And by Monday, his operating account was out almost, well, it was 5 figures. It was almost $30,000. He was a small cleaning company with 15 employees. Luckily, we were able to help get those funds back, but it took about 35 days. That business owner had to use his home equity line of credit to make his payroll that month. So I'm going to talk a little bit more about what we call negative cash flow. But having a great plan for fraud, I would encourage you to grab your business banker, talk to your accountant about the frauds that we see, so that you can help prevent that from happening in your business.
And I'd say, we as a bank do everything we can to help prevent it, and I'm always amazed at the things we do catch. And it's, from checks that have been, for some reason it pops through some software and kicks out, but, and I'll look at it and go, how did they ever catch that? But obviously we can't catch everything. So, the best prevention is double checking and, checking your accounts every day, because 24 hours is not very long. And I had a client not long ago that I think it was 48 hours, but he just hadn't checked his account. And he looked at his account and he said, well, this isn't ours. And we have to go through the process, but there's no real guarantee that we can get that money back. The best protection is to check those accounts.
Accelerating cash flow payables, so holding on to your cash longer. This is an important part of cash flow as well. So again, getting away from paper, using paper invoices, using paper checks, we want to help our businesses understand using a purchasing card or a credit card. For some businesses, using a credit card or purchasing card to make your purchases actually extends your cash flow by about 28 days, because the credit card company will send you the bill and you've got 28 days to pay it. So that can help extend your cash flow if you're in times where you need working capital for your business. So I always encourage business owners to get a credit card or a payables card for several reasons: to help extend their cash flow cycle and to start establishing credit for your business. Because when it comes time to buy a building, or when it comes time to get a gigantic working capital loan, the bank wants to see several things. And maybe you could talk a little bit about business lines of credit and equipment loans.
Yeah, kind of going back to the barber shop, obviously that's probably not a place that needed for cash flow purposes any kind of line of credit. But once you get into anything else, that line of credit can help offset the inventory that you've purchased, or again, most commonly is probably the accounts receivable side of things, where you're waiting for that to come in. And especially in industries and companies that are cyclical, where that'll ramp up, for the holiday season or something like that, and then it goes back down, where then they use the line of credit and then it goes back down. Sometimes you could do like a working capital loan that just is a monthly payment and work through it. She's also got up there equipment loans, which I see that a lot, where a company will go out and think, well, I've got a lot of money here, I'm gonna go buy a new delivery truck or something, and not take the time to look at, well, I may need that cash for something else down the road, and they've taken it down too tight. Whereas, you can always pay off an equipment loan at a later date, but getting that loan protects you, because cash is king. Holding on, what I see in a lot of small businesses is they work themselves down to such a small amount of cash, and can be unnecessarily, and then all of a sudden there's a cash crunch, and then they come to a bank or wherever, and it's a sudden emergency almost. Yeah, Brad.
I was wondering if traditional institutions have anything similar to this. So I use the Shopify platform, and they offer me credit where it's a 6% hit, but the payback is like 15% off each transaction that goes through my business. So the end date isn't set. It's based off of, like, if my business is doing well, then I'm going to be paying that back quicker. I was wondering if there was any like traditional institution thing like that that's based off of how well the business is doing, and then you're paying it back, so you're not like, if you go through a dry spell, you're not getting hit with the monthly payment, and then if it's doing well, then it's paying back quicker.
I can speak a little to that.
Okay.
So as far as a traditional banking institution goes, we're a highly regulated industry. There are a lot of rules we just can't make up on our own like that. Now, Shopify is a very specific online platform, and they want you to use, sometimes you're captive to use their processing, and because of that, they want to give you great terms to help you get off your feet on your business, but they are not subject to the same regulatory environment that banks and credit unions are. But I will share with you that if you wanted to sell items, Amazon has great terms for their businesses as well. You can get lines of credit through Amazon where they can help you. I had a customer not too long ago. We said, well, what kind of loans, what kind of lines of credit can we help you with? Amazon was helping him buy shipping containers of his material from China, giving him great terms that he didn't have to start paying until 6 months later when the shipping container of his items for them to sell showed up in the United States. They have great solutions for that, so if you know any businesses that are looking to start an Amazon business, I would definitely encourage you to work with Amazon. We couldn't even touch the terms that Amazon was giving them, so.
And I would say too, when you're looking at capital funding, a lot of people come to the bank first, and which is fine in a lot of cases. But I tell people this, that the one thing about doing a bank loan, if you do an equipment loan, is usually with a bank in 30 days that first payment hits. The clock starts, and whether your cash flow's going, that payment's going to hit. Whereas I think a lot of times, and I know it's a struggle to do, but work through and find investors, that type of things, and more reasonable terms on especially when you're just getting going. Banks, traditional banks, are going to look at your past history, other sources of income, other assets, that type of thing. But maybe you're a little more flexible with an investor. That type of thing can help you get going to where you can establish yourself in more untraditional borrowings. I think it's important to work through that, because having that capital is just so important, especially when you do go to the bank. And Bankable up in Anderson does a good job of working with the small business too, to help them get to the point, as their goal is to make small companies so they can go to the bank and that they're in a better position. But that's something to think about.
So the last few on the list here are ACH payments to your vendors. So you can push ACH payments to your vendors just like you would a direct deposit to an employee. So if you want to pay your vendors on the due date rather than putting a check in the mail 2 weeks early, or have more control over that, the same ACH system that allows you to pay your employees by direct deposit, you can push to vendors. And a lot of vendors that you work with can pull payments from you as well. So if you want to work with your vendors to pay items, if you want them to pull your payments, they a lot of times can. So I would encourage you to work with those folks to see if, to help with your cash flow cycle, they can pull your payment on the due date. And it's one less thing for you as a business owner to have to worry about.
And in all of that, I think working with vendors, working with your bank, communication is so important. If you have a supplier that you're doing a lot with, talk to them, tell them what's going on, especially if you're very comfortable. But, the main thing with your bank, communicate with them, let them know what's going on. I think it's just so important that you do that.
And I have seen suppliers give maybe 2 or 3% discounts for when they are allowed to pull their payments, and that saves them the 3% or so that they're paying if you're paying them by credit card or payables card. So sometimes you can work with your suppliers to help get discounts on your merchandise.
Yeah, it doesn't hurt to ask.
It never hurts to ask. So let's talk a little bit more about negative cash flow and fraud. We talked a little bit about people duplicating your checks and cashing them over a weekend, and really the days of a $500 fraud are gone. If somebody's going to duplicate your check, they're going to do so with purpose. They're going to make a bunch of them, and they're going to try to cash as many as they possibly can. I used to be a banking center manager for over 7 years, and we would call the farthest lane of the drive-through felony lane, because that's always where people who were trying to fraud us, because we couldn't see that far, they would try to be somebody else, or they would try to pass a check that was a duplicated check or a fraudulent check. So we always refer to that far lane as felony lane. But some of the other types of fraud that we can see, and another reason it's critical to monitor your accounts, is again with a mobile deposit. The type of fraud that we're seeing is somebody takes a picture of the front of that check, but takes a picture of an endorsement on another check. And that means that they get that check to go through on their mobile deposit, but then they take the unsigned check to an actual banking center and cash it at the banking center because they sign it in front of the teller, and the teller doesn't know that it's already been mobile deposited. The result is the same. The money comes out of your account twice, and you need to notice that. So somebody in your team has to be monitoring your accounts for that. A similar situation, and even more likely, but not malicious, I take a picture of a check at my house, and I take a picture of it front and back, it's in the account, I leave it on my desk, and a week later, my husband comes by and says, oh, we need to deposit that, and takes it to the bank. Not malicious, it was an accident, but the result to your business account is the same. The money comes out twice. Most of your banking centers will work with you if there's a check fraud, but the most important thing is that you let them know ASAP that a duplicate check came out. Yes?
Question. So I work at a very, very old-fashioned company where we do not have direct deposit. We get a hard check every week. What is the standard practice to do with a check once you take a deposit? I know it's a stupid question for anybody who may know the answer to that, but because I don't use a lot of the mobile deposit, my bank takes longer than a day to deposit that. So, but once you take a picture, what is the standard practice to do with that? Should you keep it? Should you just throw it in the trash?
We recommend that you keep it for 14 days. Make sure it's in your account a few days later because it generally pens on that first day. And you want to hold onto it for 7 days just in case the maker of the check says, wait a minute, I don't recognize that, or maybe their software kicks it back. You want to make sure that you have that paper item in the event that something happens in its transmission. But 14 days usually, and we would recommend shredding that check.
Yeah, I would say, maybe make some sort of system of putting them somewhere and in a drawer or whatever, and then when maybe you reconcile your account or get your statement, then
I
shred
write
it.
deposited and the date gigantically on the back of the check so that my husband, if he finds one, doesn't try to do that. Because the bank really frowns upon check fraud amongst employees.
Some mobile deposit ones have you put your account number underneath the signature, and then that's sort of like a way you can be like, oh yeah, I've already.
Yeah, I've noticed too, they put a box now that you can check that says
When you get a
mobile.
hard check every 2 weeks, you have to have a check stubs box. So
Right.
Yeah,
Now, as it pertains to writing your check number or your account number on the back of a check, that is not a required part of the endorsement, and it's really important to know if you write your account number on the back of that check, whoever gave you that check is going to be able to see the front and back of it, and they will now have your account number.
Okay.
So it's important that that's not a required part of the check.
Okay.
So if you don't feel comfortable giving your account number to who gave you that check,
Okay.
then I wouldn't do
Okay.
that.
Are you seeing any trouble with PayPal fraud?
PayPal runs a really tight ship. They really do. I personally have not seen any of that, and I've been working with PayPal since their inception on the bank side. We used to recommend getting a separate account for PayPal because we didn't know how they were going to do that, but that was well over 10 years ago. I haven't had any challenges.
I
from
think the
any-
main thing on that would be more of where you may have gotten your computer hacked, where they're getting your password.
Right.
That's probably,
Happened a couple years ago, and then it's happened recently.
If
yeah.
they're getting a hold of your
Yeah.
account number and routing number, I would look at your cyber systems to see if somebody's getting into your systems. Business email compromise continues to be a #1 way that fraudsters are getting a hold of your information. So I would encourage you to train your teams to not, we just had a cyber presentation this week at the bank, and apparently 1 out of 5 emails that businesses are receiving are fraudulent emails from folks that are phishing for your information or so on and so forth. So I would encourage you to train your teams not to click on things that they see online, not to click on emails. You can hover over links to see where the link is coming from. And really some of the big sources of fraud that we see are the person who normally writes your checks and pays your vendors goes out of town, they post a picture of themselves in Hawaii, the fraudsters are lying in wait in your system. They say, oh, the normal person's in Hawaii. They copy an email that looks like that person's, sends it to you. Hey, I forgot to pay this vendor before I left. I'm out of I can't pay them from here. Will you please wire the funds to X and X? And most people who work for a company, if they get a message from their CEO, they're going to do that. So it's really important that you train your teams to never transact business by email without verifying. So if you were to get an email like that, you would want to call the person on the phone, verify them over the phone, and then send the information.
Yeah, I think they'd much rather have a phone call from you while they're in Hawaii than you wiring out $30,000.
Right.
But, I've seen when you said it, they copy that email.
That looks just like that person.
I had someone that this happened to, and they said, well, that email, they wrote it just how their boss would write it.
And sometimes they can be lying in wait for months. The cyber professional that we had speaking on Tuesday said the average time of a breach So when the business customer finds out is 201 days. And that's for small business, that's for Home Depot, that's for Target, that's for everyone. 201 days they could be lying in wait on your system, waiting for an opportunity to defraud you.
And I know, like, in the bank, if a customer calls me to do a wire or something, you know, I call them back, and it could be someone I talk to every day. You know, I know them and everything, and, you know, we had a conversation about, you know, our kids or whatever, but I will call them back just because you just never know, and you just need to put together some sort of procedures that, you know, that you follow, that you don't shortcut it just because the one time you shortcut it, suddenly it's a problem.
So you're talking about laptops or your desktops possibly being breached. What about phones? So much of everything we do are on phones.
So the information they shared with us on Tuesday, and this was a world-renowned hacker. He was a certified ethical hacker and went worldwide to help businesses with this. He said that it doesn't necessarily matter what phone you have or what software you're running, as long as you have the latest updates for that software or for that phone. You have to update your phone the second those updates come out, because what hackers and cyber stalkers are doing is they're taking advantage of the folks that haven't filled those patches in and looking for the weaknesses to be able to defraud you. Okay, I had a question for you.
Oh, well, so like one time my business received a check in the mail from a plumbing company in Wisconsin, and I ended up calling the bank that the check came from, and they were like, well, actually, and it was, the business was in Wisconsin, but where I received the check from was like in Carolina or something. And so what they were trying to do was have me cash that, so then I'd be on the hook for the lost funds of pulling from someone else's account. And so,
It's terrifying.
yeah.
My advice would be, if you get money for no apparent reason, there's probably,
Well, and we have a phrase in the bank, trust but verify. You trust
Yep.
the people you work with, you hire them for a reason, but verify, because we're also trusting, and we want to be helpful in our jobs and our roles, that it's very easy to defraud people. I had a couple of fraud stats here, but I would encourage you to talk with your banking team about online banking, how you can set up user designations that one person sets up the wires, another one authorizes them, or one person sets up the bills going out, another person authorizes them. Most online bankings at most financial institutions can do that. I would encourage you to talk to your bank about Positive Pay, whether it's ACH Positive Pay, so that nobody can come into your account and pull funds. But most companies do allow some people, like their insurance company or the taxing authority. So ACH Positive Pay would allow you to set entitlement. So the insurance company's allowed to pull one time per month of not more than $500. Taxes are allowed to pull as many times as they want. We don't know when we're going to send them. And nobody else is allowed to take money out of our account. Then the 24-hour thing doesn't become so much of a problem, because the software will text you or email you or automatically return anything that you haven't previously authorized. Check Positive Pay is for businesses that are writing a lot of checks or any amount of checks. Basically, you upload your check issue file from your software, or you go in and say, I wrote check number 101 for $100. If those checks come and try to clear your bank without being an exact match, it will return them or ask you to authorize them. So in the event that you hand somebody a check for $100 and they change it to $1,000, this type of software will stop that and say, hey, wait a minute, did you mean to write this for $1,000? Because you told us you wrote it for $100, and it will stop that fraud from happening. Account reconciliation, it's your number one defense. Somebody on your team needs to be looking at that on a daily basis. We talked about lockbox, having internal audit procedures. The people who are sending your invoices, the people who are receiving your payments, cannot be the person to audit those payments. The internal fraud that can go on is significant. Before I let you go, I'll just say one more thing about internal fraud. Keep an eye on whoever's allowed to make refunds on your credit card devices, whether that's the machine or your computers. We had a fraud not too long ago where the business owner didn't notice that the employee was making a refund to her account one time per month. Her debit card, her credit card, a prepaid card, and over the course of 2 years, she stole $40,000 from the business because a single refund went unnoticed per month for 2 years. So the person who's making the refunds cannot be the person who's auditing the refunds. Again, because if that fraud comes out of your account, that is negative cash flow. It could be months before you get that back. So some of our best practices and takeaway today, be proactive, know how to operate your accounting software because you need to know the numbers. You can't fix them or make them better or accelerate cash flow until you know your numbers. Have a business plan, again, know your numbers. Monitor, 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 I can't say that enough. Consider getting a line of credit or a credit card to fund the timing differences in your cash flow cycle. Consider talking with your accounting team, your legal team, your banking team to implement a fraud mitigation solution. Train your team, enhance your internal policies, make sure your team members and your employees and your coworkers know what's expected of them at work, to not click on emails, to never send a wire based on an email, to never send out payments based on anything you receive online other than talking to you personally. Consider getting cyber fraud insurance. A lot of businesses will offer insurances that you can get in the event that somebody lies in wait on your computer and steals a bunch of money. Sometimes you can be protected for that. And ransomware is still something that we see in the marketplace. So always have your systems backed up on a location that is not on site. So what other last minute?
No, I think that, again, the monitor, watching what's going on, it's easy not to look at your accounts and see the activities. Just make sure once a day you're just kind of glancing through it, and if you don't have a lot of activity, it's pretty easy. But, just communicate with your bank. We'd be happy to answer any questions here afterwards, but thank you, Heather. Appreciate everything.
Thanks, everybody, for coming today.
As we wrap up, in the middle of your table,